Namaskara. Welcome back to the next session, that is part 4C, that is accounts for all. In the previous session, we have learnt the meaning and golden rules of the personal account, real account and nominal account, and how to identify those accounts. That we did it in our last class. Now in the current session, we would like to say that how to classify and how to identify the different transactions that we learn. But before that, I would like to state two things. One is a quote. Why we are learning these accounts? So there is a beautiful saying, behind every good businessman, there is a great accountant. That means we can say that accountant plays the vital role in every business. For that sake, we are learning accounts. And the second one is, if you are really liking the lessons given by Educator Guru, I request all of you to subscribe and share among your friends and student circle. Thank you. We will proceed with the lesson, that is classification of accounts. Here I have written so many things, but have used observation. Don't worry, it is very simple. Whenever you see an item, you must be able to see whether it is real account, nominal account or personal account. Then only we can do the next process of accounting. So that one is, first I have written cash. So you can buy anything, you can sell anything. That means cash is one thing which is on hand. That means it is real. When I say or, it is real. So cash is real account. Bank is a person which is created out of law. Whether it may be a cooperative bank, it may be a scheduled bank, it may be a national bank, it may be anything. But when you say bank, even though the amount is there in the bank, but bank is a person, it is personal account. Then furniture, yes, you can see, you can touch. If you don't want it, you can sell it off. That is why furniture is real account. Then salary, I have already told you, salary neither you can see nor you can touch. It is only our imagination. When that is the case, that means it is an expenditure, right? When it is an expenditure from the point of a business, then it is called as what I say, nominal account. Then commission, either received or paid. Once again, it cannot be seen. Once again, it is called as what I say, a nominal account. Then printing and stationery, it is keep on what actually spending the amount. You cannot have one pen throughout your life. If it is an ink pen, then you will have to put ink for that. If it is refill, then you will have to change the refill, because you will have to keep on changing, but you have to spend the money on that. Then once again, it is printing and stationery is what actually nominal account. Then postage and telegrams. Once you take that postage, then if you put it, then there ends the matter. Then you may say that telegram, now we don't have telegram at all, it has been closed, but it is a word which has been used from long time. That's why I have mentioned that one, postage and telegram. Let us recall our history, right? That is called as postage and telegram is what actually nominal account. Then salary payable. Salary payable. When you say salary payable, so you must be able to distinguish. Earlier I have written only salary. Here it is what actually salary payable. So this is a very, very important. Everybody thinks it is nominal account. It is not nominal account. When you say salary paid, it is nominal. But when salary payable is not nominal account, it is personal account. It is outstanding, which is outstanding. So you cannot call it as nominal account, you will have to call it as what? Personal account. So this is where what do you mean by representative account, which is called as what actually representative account. So when you say salary payable, it is what actually personal account. So all students usually when they are learning, they commit such type of mistake. Then rent receivable. Rent paid is nominal account, but rent receivable, still I have to receive. I have to receive from whom? I have to receive from a person. Then it is once again it is called as what? Personal account. Then stock. What is that stock? Stock is what actually unsold finished goods, or goods are laying what actually in the business or go down, whatever it is. That means that can be sold and converted into cash. Then stock is what actually stock or inventories are one and the same. It is called as what actually real account. Then creditors, whom you call it as creditors, where I have to pay the amount to so many persons which have purchased goods or anything else. That means I am due to somebody, where I have to pay the money to somebody. Due, when you say that due, it is very simple, which is called as what actually creditors, is personal account. Then debtors, I have to receive from somebody. I have to receive from somebody. When I say I have to receive somebody, means it is somebody is person, company, bank, whatever it is. Then once again, debtors is also what actually personal account. Then loose tools, whatever you call it as. Once you say that to tools, you don't like it, then you can sell it off. Then you will get what? Cash. Then that is called as, what do you mean by loose tools, is what actually real account. Then loan from bank. It is very simple. Bank is also a personal account, and you have taken loan from bank is also personal account. That means it represents a person. This is how you have to classify so many transactions. It just have given you the gist of a few transactions of real account, nominal account, personal account. In the similar fashion, what you have to do is, whenever you see something, then you say that whether it is real account, personal account or nominal account, if you are able to identify, then it will be great and it becomes easy for you to learn accounts, and you can say that behind a very good businessman there is a great accountant. It can be proved. The next step is what? The next step is we have to learn some important basic terms in accounting. If I learn few things, there are so many things are there, but I am going to explain the most important. Then stage by stage you will come to know so many things. You need not worry for that. Sir, without basic terms, nothing is there. In that, transactions. Very simple. When transaction happens, when you start business, then the transaction happens. To start the business, what you are in need? You are in need of capital. You are in need of capital. What is capital? The amount that I have invested to start the business. So many things, so many persons, they think capital, it should be only in the form of cash. That is wrong. It may be in the form of cash or it may be in the form of kind. For that, let me get you one example. You will go for your friend's marriage or some occasion where you would like to give some, what you call, something that you would like to give a gift to your friend for some occasion. Gift need not be in the form of cash. Gift can also be in the form of some kind. In the similar fashion, capital, cash along with in the form of kind. So once you say that capital, that means the transaction starts. What is the transaction? I'm doing my business. So without a transaction, nothing happens in this world. Let us take one more example for transaction. How bank works. If customers enters in the bank, he will deposit or somebody will withdraw the money, then the transaction will take place in the bank. In the similar fashion, when we do our business or we are starting our business, transaction is a must. So that's why I said parallelly I have written capital. So once you say that transaction start, what are the different transactions that we have? Goods. This is very, very important. So many persons, they say that goods is what? Say very simple. Which one you can call it as goods? In which business that you are doing, that itself is called as goods. Example, I am doing silver business. When I am doing silver business, I am purchasing silvers and selling silver, which is called as, for me, it is called as goods. Assuming that I am dealing with rice, I am purchasing rice, I am selling rice, then rice is my goods. That means every businessman, they should what actually do the business with some particular important item that they are dealing, or so many items, whatever you call it as, the items which you are dealing, buying and selling, that is called as what actually the goods. So that is first point, that is goods without that. The next one is purchase and sales. Yes, I told you goods is called as what you have purchased and what you have sold. Purchase and sales is also very important. That means why you have purchased goods? To sell. Why are selling? To make profit. So that is very important. That means we are supposed to understand, that means we are goods purchasing and we are selling goods. That is also called as trade. That is also called as trade. Buying and selling what you call goods and making profit out of it. It is called as what you may by goods, purchases and sales. But that is not the one point. In that, where we have one most important point is, that is expenses, income. When you are doing business, definitely you have to incur expenses, and you will gain what actually? Income. That also part of what actually important, that is called as accounting. It is full of so many factors. That is why expenses is there, income is there. So for that, let me get you one small example. When you have started your business with your capital, the transaction starts, you will purchase goods, you will sell goods. But when your customer comes, then you will offer him one cup of coffee. For that, you have to pay from your pocket. When you pay from your pocket, then is it not what actually expenses? It is refreshment expenses. Likewise, what happens when you sell your goods to somebody through an agent? That agent will get you some commission, right? When he gets what you call some commission, then that commission that have what actually earned, that becomes what actually income. In the similar fashion, that means for the transactions, goods, purchases, sales, expenses, income. Then I will come back to one thing. For all things, why I am doing, why I should do business, either to get profit or I have incurred loss. Either to get profit or what actually? Incur loss. But this is not only the thing. For this, we have additional 3 more things. What are those additional things? That is called as, what do you mean by drawings? What is drawings? Opposite of capital is drawings. See, very simple. When opposite of drawings is capital is drawings. Why? Say, I have invested all my money in the business, but I have to run my family also. When I have to run my family, I have to draw some amount from the business to run my family. Assuming that every month I will draw 5,000 rupees and I will give it to my wife to run the family, to buy what you call provisions, to pay for milk and other things. Likewise, every businessman, there are 2 different what you call entities. One is individual, other one is business. I am talking out from the business point of view. That means called as, when I invest capital, then I have to run my family, then I have to draw the amount at regular intervals. That is to run the family expenses. That is called as drawings. But when I invest capital, do you mean that only for goods and purchases or sales? No. To do that one, we are 2 things. One is we will buy some assets and we will have some liabilities. What is that asset? Very simple. When I start my business, I will take one big building for rent, right? In that I will put furniture. When I put furniture becomes what I call asset. But if I buy that furnitures on credit basis, that means I have to pay that amount to somebody. Then I have to pay that amount to somebody is called as what I call liability. Is called as what actually? Liability. So now we have understood so many things. That is, a transaction how happens? Transaction in many ways. That means goods, purchases, sales. Then for that capital, then the things what happens actually expenses or income, or we will get profit or loss. Then it is called as what I say? Drawings. Then assets. Then liabilities. All these things comes in one aspect. But now we have written one important word also, stock. Why I have written stock? Whatever the goods that I have purchased, don't think that I can sell everything in the market. Then if I think that I'll be a fool, because it is not possible, because you cannot predict the market mind. Market mind. That means unsold finished goods. That means it will be in the stock. It will be in the stock. So how you are going to treat that one, that is also part of what actually your transaction. So these are all the basic terms that I have to learn. Apart from that, two important factors are there, which is called as in the transaction. One is debtors. I've already explained you. The other one is creditors. Why I am explaining this one in the last, to get you the hint. All transactions cannot be made only through cash. All transactions cannot be made through cash. Along with cash, you will have to do credit transactions. When you do credit transactions, then the two terms will appear. One is debtors, the other one is creditors. It is very simple. When I have sold my goods on credit, then I have to receive the amount from persons. I have to receive the amount from persons, that they are called as debtors. Assuming that I have sold to Mr. X, Y, Z on credit basis, then they are called as what actually? The debtors. They are called as debtors. At the same time, where I will purchase the goods from A, B, C, I will purchase the goods from A, B, C on credit. On credit. That means it is very simple. When I have purchased the goods on credit, then ABC will be called as what actually? Creditors. ABC will be called as what actually? Creditors. That means the transactions are very simple. That is, without a transaction, nothing happens. Nothing happens. So this is where we have to learn the account in this step. In my next session, we are going to learn, that is, how to identify transaction and to classify the transaction. Thank you.